Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, April 29th. On Tuesday, market participants were hesitant to make any concerted moves ahead of Wednesday's first quarter GDP reading and FOMC policy announcement. As a result, the stock market posted a slight loss and relatively light trading volume. Better than expected earnings helped offset some disappointment over dismal housing data and a sharp drop in a Dow component stock. More than 100 companies reported their quarterly earnings results after Monday's close and before Tuesday's opening bell. Credit card processors Visa and MasterCard both reported earnings results that topped their respective estimates. Visa topped its estimate by 17%, while MasterCard beat by 30%. Shares of Visa were sharply lower in pre-market trading on its report, but rebounded into the green as traders embraced MasterCard's large beat. Shares of Visa are now up 84% since the company's March 19th IPO, while shares of MasterCard are up 30% during that same period. Other notable names that topped estimates included Archer Daniels Midland, Avon Products, Burlington Northern, Corning, and Medco Health Solutions. Yet the worst performing stock within the S&P 500, Merck, had nothing to do with an earnings report. Traders sold off the Dow component stock after the company issued a press release stating its cholesterol drug Cordaptive was not approved by the FDA. This came as a shock to analysts who generally thought it would get approved. Merck reaffirmed its full-year 2008 earnings outlook despite not getting approval for the drug, yet that did little to ease fears. Traders drove the stock down more than 10%, sending it near its 52-week low. Economic news was not good, although consumer sentiment did decline less than expected. The conference board said April consumer confidence fell to 62.3 from 65.9, marking the lowest consumer confidence in roughly 5 years. The number, however, is better than expected as economists projected the reading to slip to 61.0. This is just a survey and does not have that strong a correlation to actual consumer spending. The housing market remains in a rut. The S&P Case-Shiller Home Price Index posted a record 12.7% year-over-year decline in its 20-city composite. Las Vegas had the steepest drop with a 22.8% slip in home prices, while Charlotte was the sole city to post a gain, up 1.5%. In a separate report, first quarter foreclosures increased by 23% from the previous quarter and spiked 112% from 1 year ago, according to RealtyTrack. Separately, commodities posted a steep 1.9% decline, with oil retreating 2.9% and gold sliding 2.6%. A portion of the selling interest was fueled by a 0.5% gain in the dollar index. The slide in commodities and oil prices prompted traders to lock in some profits in materials, which were down 3.1%, and energy, which fell 1.5%. Those were the two worst performing sectors on Tuesday. Despite the session's decline, the sectors are still the best performing this year, with energy up 1.6% and materials up 0.9%. 4 of the 10 economic sectors posted a gain Tuesday, led by telecom, which was up 0.9%, and technology, which advanced 0.6%. I'm Pat O'Hare for Briefing.com. Thanks for listening, and have a good evening.